we're going to go into that too a little bit later. And so we spun up some Airbnbs there. A lot of my mentorship students and my coach, and they're spinning up Airbnbs in Houston, in
Hmm.
certain areas in Houston, and it was like night and day. We were doing okay. We were doing great in the summertime, but Galveston being a seasonal
Right.
market on the beach, I mean, we were just getting crushed in the winter. And so, and looking at the data looked okay. Like we could weather that every year. But it got saturated fast. People
Yeah.
were in that
Like
market.
right away that year,
Right.
21.
Yeah. Like, so 2022 was good, but that first winter was like, okay, is it going to be like this every winter? And so we weathered that, and the next winter was about the same, and then winter 2024 was pretty rough. This last winter was
Yeah.
pretty rough. And Houston, on the other hand, in certain areas, especially, again, we're going to talk about this, like around NRG Stadium, in the
Hmm.
medical center area, near the zoo, the ballpark, things like that. They're a lot more consistent on on their seasonality.
You
Um,
think that has to do with more professional needs being
yeah,
close to
there's
the medical
definitely
center?
ways to offset some of the seasonal influx, ups and downs, because you have business professionals coming into town as well. So
Hmm.
we pivoted this year, and we turned some of our short-term vacation rentals into long-term rentals
Right.
and renting to, primarily like UTMB students. And so once we did that, what that did was it didn't necessarily like increase our revenue, but it just evened it out, where we just have a more consistent cash
Hmm.
flow for those properties. It's something that we're just able to accept at this
Sometimes
moment.
just having that consistency just gives you a little bit more peace of
Yeah,
mind and rest
yeah.
because with
Mhm.
the volatility, it to me that sounds nerve-wracking to me. Getting,
Yeah,
you
yeah,
never know when you're
definitely.
going to have a vacancy or an occupancy.
Yeah, definitely nerve-wracking with the seasonality. But, as you enter into other mature markets, like in Houston, for instance, where you have more consistent income and occupancy, you're going
Hmm.
to have your months, we're not talking like 3, 4, 5 months at a time, but you may have a month that's just a little bit slower than the previous month, but then things start to pick up again, in Houston. And that's what we're seeing, because we also manage some properties in Houston. We also get feedback from a lot of our students, including my coach as well, on properties in Houston. And really, people have pivoted a little bit too in Houston, Austin,
Hmm.
is, they're doing things like furnished monthly rentals or midterm rentals,
Yeah.
for those
Stretching them
professionals
out a little bit, stretching the
that
turns
are
out a little
coming
bit
into
longer.
town, right? You're stretching those out, and you're providing a furnished unit, whether that be a studio or a two-bedroom house or a two-bedroom duplex, one side or something like that. And it's centrally located, so
Hmm.
it's close to downtown, close to, east downtown. You're close to the medical center. You could have business professionals. You could also have families that are in town for a month
Yeah.
or two. Maybe their family members getting treatment, at the medical center. And that's a lot better than staying at a hotel
So in those
or
areas, you're seeing more like 30 to 60, 90-day stays or
yes,
okay.
yes, yeah,
So
definitely.
so there is a demand for those kind of we call 'em kind of midterm 30 to
Yeah, for
180
sure.
days.
For sure. Yeah, yeah, for sure.
So let's go back in time. So the first person that I knew back in the early 2010s that had a successful Airbnb had a house in Nassau Bay with a garage apartment. This is probably before Hurricane Harvey. And he was making so much money on that garage apartment that all the income, and this was at less than a 50% occupancy annually,
Hmm.
it covered his mortgage for years. Like his whole mortgage was being paid just by the garage apartment. And what do in your opinion, when you go back to 2021, because I was 60 minutes away from buying a waterfront property as well, and that fell through at the last minute. I ended up never closing on it. What factors do you think contributed to just this frenzy with these short term rentals? Why do you think that became so popular and that market became so strong?
Well, I think just in general, short-term rentals, Airbnbs, VRBOs became so popular right after COVID. That's when the boom really happened. That's when it started to peak. And,
Mm,
remember there was a period of time where we were on lockdown,
yeah.
and once the gates were opened, right, there was a lot of pent up vacation people that wanted to go on vacation and they didn't want to stay in hotels.
Right.
Right? There's too many people in the hotel because people
Hotels took
want.
such a big hit.
Yeah, yeah. Hotels took a big hit in the beginning, right? So people wanted that privacy. They wanted the space from other people, right? They didn't want to be around too many people in a small area. So Airbnbs, like people's extra home, whether it be a home or a garage apartment or an ADU or something like that. That's when it really peaked. And then, of course, you had just the buying frenzy that happened too
Hmm.
at that time, right? You had historically low interest rates,
Yeah.
so property values were going up. People were you were getting multiple offers on properties at the time. That was happening a lot in
Yeah.
Galveston. Even fixer uppers were selling, for above asking price at the time.
Yeah.
And then so what happens, right? Once you have this inflow of people coming to a market and then it gets saturated, and now you have all of this added competition,
Yeah.
right? And then now you're just kind of racing to the bottom on your price, and you can't go too low,
Hmm.
right? Because then you're gonna get the wrong type of guest into your property.
Yeah.
If you get into
Okay.
that, right? So anyway, and so like if you look at the market now in Galveston, and we talked about it before, Austin, is there's probably 700 or 800 properties for sale in
Yeah.
Galveston. A lot of those are furnished Airbnbs
Oh
that
yeah.
are being listed for sale.
Yeah. I'm painfully aware of that. Just, I'll throw out some names, the Victorian, Costa Del Mar. We have all these condos in Galveston that were really strong performers in the STR market in 2021 and 2022. And those properties were selling for close to 200 for little 450 square foot condos they were selling
Yeah.
for. And now you can't give them away now, unfortunately. So yeah, a lot of people put a lot of money. They were very hopeful. I don't think anybody could have predicted how hard that sector was going to crash. I mean, I wasn't expecting it to fall like
No,
that.
no, I wasn't expecting it. We used a tool called AirDNA as
Hmm.
well, and you can use it for free, but you can also purchase the premium edition, which we did as well. We were looking at Galveston, a specific market, and you could see because then it shows you these trends, like we keep talking about on our
Yeah.
show. It would show you the trends. Okay, this is what you can expect in the wintertime. This is what you can expect in the summertime, and it was just
Did you
showing you.
did you find that data to be consistent and accurate, or did it
I
shift?
mean, yes, but they didn't like it couldn't predict the influx of people coming into market and like your
Right.
competition. That's one thing that tool could not predict. You know, I don't know if anyone could have predicted it. Maybe talking to the right real estate agents, and seeing because they're going to have a lot of information because they're talking to a lot of buyers that are entering the market
Yeah.
right at that time in 2021, 2022. And if all these buyers are saying, oh yeah, I want to buy a vacation home, and if you're networking with a bunch of real estate agents and they're all telling you the same thing, man, everybody's coming to Galveston to buy
Right.
vacation homes, right? What does Warren Buffett say? Run the other way,
Right. Yeah.
right? So
It was a bandwagon move.
yeah, yeah. So like nowadays though, what I do is when I'm interested in a market, whether it be Houston, Galveston, or somewhere else in Texas, I'm still a single state investor. I'm not investing out of state, but even if I were investing out of state, I think one of the first things I would do, Austin, is open up Airbnb, type in the area I want to vacation to or go
Hmm.
to or I'm interested in, and then I would kind of play with the filters, right? For 2 people, 6 people, 10 people, 12 people. And I would look and see in that area how many listings are there,
Yeah.
right? Are there 10 listings or are there 300 listings? And it's easy to tell. I mean, Airbnb is going to show you all these listings, right? So for that geographical area, you can kind of get the picture. Is this area just saturated? Is
Yeah.
this going to be my competition? Is this where I want to choose to compete? Do I want to make my life harder? Or do I want to go to maybe an area that's mature enough but not overly saturated?
So number one, just to model it out, when looking at potential STRs, and let me preface this next section by saying that yeah, there's been some very disappointing outcomes with this sector, but there is still we're going to preach this sermon all day long. Anytime something looks bad, there's gold in those opportunities. And so our question is not to say what is we're not here to say like this is a bad investment strategy. We're here to question and to kind of analyze and try to identify where the opportunity is. Because would you agree there's opportunity in the STR market? You just got to know what you're doing.
There's still opportunity in Galveston, because you could still operate an STR in Galveston if you're buying the property at the right price.
Yeah,
You
it's a
know,
numbers
if you,
game.
if you are paying at the top of the market for at property values and you reach the peak at the same time and interest rates peaked
Hmm.
at the same time,
Yeah,
like all those things are working against you. So then when you have interest, I'm sorry, when you have insurance and taxes going up at the same time as well,
yeah,
that's pushing you over the edge,
right, right.
right? So if you can buy a property kind of like at a fire sale price,
Yeah,
where now you can actually cash flow as a long-term rental and a short-term rental, before you couldn't, you had to operate it as a short-term rental in order to
right.
make. But if you can buy this now for a third, or 60% off on the dollar,
Yes,
right? Now you can make money as a long-term rental too.
and
So
I
there's still opportunities for both those exit strategies in Galveston if you're buying at the right price.
in my experience selling these properties and representing buyers and sellers with these properties, one of the biggest missed opportunities with these STR investors is knowing their numbers like we do on the commercial side. Like if you look at any of my commercial listings, I can tell you what the annual revenue is, what the expenses are, what the net income is, what the cap rate is. It's very rare that you find somebody that owns a furnished Airbnb that knows that number. They may know how much they got in rent in a given month or even a given quarter, but to really be able to break down their total income minus their total expenses and really say, hey, I've been averaging XYZ as a net income, that starting number with so many of these properties that we've looked at over the years, it's really hard to get clarity on that with a lot of owners.
I think it's hard. It's the hardest for new investors, for the newbie investor, or a newbie investor that's entering a different market. You know,
Hmm.
like Galveston, for instance. I mean, if I would have asked more questions of real estate agents or talked to more people about windstorm, flood insurance, taxes, those things, and just kind of at least had them as data points because I'm just taking estimates at that point. But I had access to a bunch of realtors and other investors too that I could also ask, like, hey, what are you seeing for insurance rates
Right.
on these particular properties? Instead of just taking guesses,
Yeah.
or trying to take educated guesses. And same thing, like how much are your cleaners charging you?
Right.
How many cleans do you typically have in a month?
Hmm.
Right? What's your light bill typically? Your water bill? All
Right.
of those things kind of factor in if you need to know those numbers too when you're doing your underwriting.
So let's go through this now. When we're looking at possible opportunities for SCRs, number one, you mentioned saturation, right? You're looking at what is there just to begin with.
Yeah.
Is this a community or is this an area where there's a ton of listings on Airbnb or Via Burreo, or perhaps in some cases you may be looking at a property that has nothing around it, and that
Right.
that tells you a story also.
It does tell you a story, right? I mean, you want there's not like a number that I can give you, right? You just kind of have to take a look at the area and then just make your best guess, but also be connected in Facebook groups. There's a ton of STR Facebook groups, available right now. Get connected with a mentor or
Hmm.
coach, those kinds of things too. But right, you want to look at what are people going to visit that area for?
Right.
If it's just in some rural area, then yeah, you might not have a lot of competition, okay, but your occupancy might be kind of low too, because now you're catering to this really niche market.
Okay.
But if you're just in second ward, third ward, you're near U of H, you're near NRG, you're near the largest medical center in the world, right? You're going to have people coming there for those things. You're near downtown.
Yeah.
You know, you've got a lot of reasons why people are going to come into your area. Okay. Now you're looking for saturation at that point,
Okay.
you know? Saturation is not necessarily a deal breaker anyways for me, you know. You just have to set yourself apart now on
Yeah.
how you design your property, how marketing is going to be the same pretty much for everyone, right? You're going to be on these OTAs like Airbnb and VRBO and booking.com. It's how you design your property that's going to set you apart. You know, what type of amenities do you
Right.
have? Do you have a pool? Do you have a hot tub? You have a pickleball court? You
Hmm.
know, are you providing some extra services, maybe in-house chef or in-house massage therapist, things like that? And I'm not saying you're providing these for free, but you can provide them as a discount, as an amenity to your guests.
Right.
You know,
Right.
set yourself apart in these markets that might be saturated or
Right.
look saturated.
Yeah, and take into consideration what other properties are doing that are setting them apart. Like what are some unique besides, massages and pickleball, what are some unique features that you've seen that are really giving these STRs certain STRs an advantage over their
I think like
competition?
covered outdoor space in Houston. You know, I say covered just because it gets really hot, you know, in Houston. So if you have some covered space and then you can have some exposed space as well, but pools, hot tubs, like those are big things that people are looking for. Proximity to venues, right?
Hmm.
Or proximity to light rail as well. Um, uh, Yeah, I mean that's kind of it. And then space, right? The amount of space that you have inside and outside the home. Because some of these homes too that are listed, they don't there's no backyard, you know, there's no privacy, you know. So really building this space instead of just going to IKEA or Facebook Marketplace,
Right.
getting some furniture, just slapping it in there, that's not going to do it these days, you know.
And on the property management side, are you seeing a lot of people just kind of just wing it when it comes to furnishing these properties and
Not the properties that we manage. So I will tell you that the properties that we manage, they're all operators that really want to go above and beyond. So one of the
hmm
things that you can do, right, it's called the enemy method. So you're looking in your area on Airbnb, like I mentioned before, you're looking at the properties that are listed like your subject property is, like, okay, I
hmm
want to sleep 12 in my property. So I want to look at what are other people's properties that sleep that many? What are they offering? Right? Your job then as an investor is I just need to be as good or slightly better than those properties. And my price just needs to be equal to or slightly less than their price.
right.
And that's what you factor into your underwriting.
Just
You
an
know,
edge. You just
yeah,
need an
just a
edge.
little bit of an edge, especially like in the beginning when you first list your property, Airbnb is pushing you to the top of their list, and
Hmm.
your pricing is going to be a little bit lower than everyone else's because they want you to get those bookings right away. They want you to get your first three bookings as soon as possible, and you're offering discounts. You're trying to get good guests in there. You're trying to get those 5-star reviews ASAP as soon as you list, and that'll keep you listed high.
So when analyzing and putting together what we would call a pro forma, the factors that I would think you you got to look at, like, how do you determine how much money this thing can make?
Yeah.
Because your rates are going to fluctuate throughout the year. Your occupancy is going to fluctuate. Like, how do you predict that with general accuracy?
Yeah. So, I mean, that's when we use tools like AirDNA. You
Hmm.
know, AirDNA is just, you know, it's an aggregate of data, right? And it's an average also. And that's the thing that I like and what we talk to our students about is that's pretty much kind of like your baseline.
Right.
You know, that's how I'm looking at it because your property is going to be above average. That's your
Hmm.
job is to create an above average property, not just some run of the mill average thing. So that is a baseline. So that'll give you your average nightly rate and you can plug these in. Like we have some spreadsheets that we share with our students. I got one that I downloaded
And
off of
everything you need is on AirDNA, correct?
AirDNA will give you your average daily rate. It'll also give you your occupancy as well. They
Okay.
also have a small calculator in there as well where you can plug in your taxes, your insurance, your cleaning, your utilities, your
Okay.
maintenance. plug in all those things too, and it takes you all the way to like except for your debt service, right?
Right.
You can plug all those numbers in and get a pretty good, at least an accurate or a fairly accurate number because it's just going to be average,
Right.
Austin. And that's what we use. That's what we use with our students. We have a built-in tool, Deal Smart Pro as well. So we use all those things because I think the more data you have, the better you're going to be at underwriting these properties.
One of the mysteries I haven't been able to understand is there's certain types of years where you can really push the rates. If there's like a special, like
Oh yeah,
Galveston has a lot of examples. There's
yeah.
huge events. Right now, Oktoberfest is going on. Like, when do you know when it's appropriate to really increase
hmm
your rents, and by how much? And then how low do you go in the off season? Like, how do you
Yeah.
know that?
So we use dynamic pricing tools. I mean, and this is what I like about this particular space, as opposed to like long-term rentals.
Hmm.
With long-term rentals, you don't have a lot of control over your market rate that you're getting. All
Right.
right. With short-term rentals, I think you do have a lot of control. The amenities that you offer, your design, your location, all of those things, you can charge a much higher nightly rate than another property that's a few blocks away that's just not in the
Hmm.
same, on the same level as yours, right? So you can command a much higher rate at that point. Okay. But we use dynamic pricing tools like PriceLabs.
Hmm.
And what that does is PriceLabs also takes aggregate data and it knows your market because you're putting your address in there for the property. And it's telling you when you have like these peak weekends or peak weeks or when you have like something called they call it a shoulder season, which is kind of like it's a slow part of the season, right? If you think of a shoulder like this and then this part is the high part of the season and then you've got like this kind of low part, it's a
Yeah.
shoulder season. So that's everything that's not a special event.
Okay.
Let me give you an example. FIFA, right? I'm sorry, the World Cup, right, is
Yep.
coming next year.
Yeah.
Houston, I think, is going to have 5 games, if I'm not mistaken. They're not back to back; they're kind of spread out, but they're within a certain period of time.
Yeah.
Like what we're telling our students and my co-host clients is we're marking those prices up 300% at this moment.
Wow.
So Price Labs is already marking it up.
There's no regulations
Mhm.
preventing you from doing that.
No, none. Not on pricing. No.
Okay.
Yeah. So, because the demand is going to be there, you're going to have hundreds of thousands of people coming into town.
Right.
Now, we're not necessarily getting like we're just getting some of the tournament matches in between, right? So there's definitely some other areas of the United States that might be higher demand just because of they're later in the World Cup.
Hmm.
So, but that's what we're doing right now. And some people we haven't booked anything yet, but if somebody wants to book that far out, because they're worried about occupancy, like what's going to be available, then it's going to be a boon, for our clients.
So in Houston and Galveston, what are some of the events that draws a lot of?
Yeah, so Galveston, I can tell you, like Biker Rally weekend, which is
Yeah.
coming up the weekend after this next weekend, that's usually a very busy weekend, right? So
Hmm.
where you're getting like 2 to 3 times your normal rate
Right.
on that point. Holidays like Thanksgiving and Christmas and things like that, people do come into town. They're
Yeah.
visiting family, right? They'll stay at an Airbnb, so those tend to do okay. And then you've got Mardi Gras, then you've got spring break, and then you're right back around to summertime at that point. You've
Hmm.
got Memorial Day, which is typically the traditional start of summer, and that does really great. June and July do great, and part of August, and then it just kind of drops
Kids go
off.
back to school and it drops off.
Yeah, go back to school, and then you have smaller things like Oktoberfest and Dickens on the Strand and things like that. In Houston, though, I mean, of course, you have World Cup, but they have so many other things going
Hmm.
on in Houston. I think they even had like F1 or something like that, some type of formula racing at one point in time, or they'll have big conventions.
Hmm.
Like what is it? Not Comic Con is in Vegas, but I know sometimes they do events
Yeah,
like
they
that.
they do that here. Then.
Yeah, here in Houston too. So, you know, as an operator, to be a good operator, you kind of have to be in the know as well.
Yeah.
Be connected to the chamber, the chamber of commerce for the municipality or where you're going to be looking in, right? Get on everybody's mailing list, follow Facebook and social media for the city or the town that you're in, because there's usually announcements there too. And looking at your dynamic pricing tool, like PriceLabs, PriceLabs will actually tell you what these events are and when they
Okay.
are. Yeah, it'll have them listed there, and that probably pulls from some kind of database as
So
well.
Price Lab, you find that to be pretty consistent and accurate as far as
Price
like,
Labs is very consistent, very accurate. And I think it's a must-have if
got
you're
it.
doing anything with short-term rentals.
Got it.
Yeah.
All right, let's switch gears. I want to talk about how do you operate and manage this? Because one complaint I hear from owners is how much time it takes.
Yeah.
Because when you have a long term tenant, you only got to unclog a toilet every once in a while, but here you got to clean it up every time somebody comes in and comes out. How do you handle complaints? How do you handle your ratings, cleaning, utility supplies, and all that?
Yeah, I think like with any business, you have to have the proper people and the proper processes
Hmm.
in place. And a lot of this is run on the software, right? So we use a property management software called Hospitable. There's Guesty, there's a ton of them out there. That handles a lot of the calendar syncing. If you have Airbnb, if you're on that platform, you're on VRBO, you're on Booking.com, this property management system will manage and sync those calendars so you don't get
Right.
double booked. All right. It also handles all of your automated messaging. So like you want to welcome a guest, right? I don't want to have to retype that message every time.
Hmm.
So that's automated. It's all done off certain times. Like a day before they arrive, they get the check-in information, or when they
Yeah.
book, they get a booking message. So all of that's automated.
Automated. Yeah.
Hospitable even has an AI function now, believe it or
Okay.
not, right? Where if a guest asks a question that has a keyword,
Hmm.
Hospitable will actually send them a response. For instance, I never got my door code. Hospitable will recognize that, their AI will, and it'll automatically respond. I
There you
don't
go.
need to interact with it at all. And it'll send the guest their door code or a reminder
That
on
must
their
be
door.
pretty recent. Has it been
Yeah, that
pretty
is pretty recent. Yeah,
pretty
something that they've
accurate?
done within the last 6 months. Yeah. So
So name those tools again, just
so
as a list. Just go
So
through.
Hospitable, Hostaway is one. Guesty is another one. We used Guesty for a while, but they changed their platform. They just kind of they slimmed it down. They wanted you to upgrade to something that was just didn't make financial sense for us. So we moved over to Hospitable. So that's your property management system. Then you need a dynamic pricing tool, which we've been talking about,
Hmm.
which is PriceLabs. So
Okay.
that's going to help you with your pricing. It's going to help you with your minimum day stays. You can also give people early bird discounts. All those things are handled there. And the Airbnb platform itself, we still use that for discounts and specials and things like that to try to attract guests as well. So that is how we just run that business. And then we have a small team of cleaners and
Hmm.
handymen that are available, right? Up front, Austin, I'll tell you, our properties, we take care of all this maintenance, capex, all that stuff up front. Like
Okay.
I don't want to guess reaching out to me saying, "Hey, the AC is broken,"
Right.
or "There's a leaky pipe," right? We take care of all that
Yeah.
before we even put these things in operation. But we still have somebody on call if we need some help right away. All right. And our cleaners, like those are your MVPs, because
Hmm.
those are going to be your eyes on your property. Like they're going to be the first people to see your property once a guest checks out.
Yeah.
So if a guest just, trashed the place or did things like that, they're going to be able to tell you right away. Then you can, go into your damage control mode, working with Airbnb, working with your handyman, getting things repaired. I will tell you, in the 4 years now that we've been operating, or 3 years that we've been operating, we've never had a property trashed.
Really.
We have had some minor repairs that we've had to do, and all of it's communication with the next guest. Sometimes we can't get in to repair something small, but we're letting the next guest that's incoming, we're letting them know right away, hey, this
Yeah.
is what happened. We can get anyone there. Hope it's not a problem. They're usually like, no, everything's fine. Don't worry about it. We send them a small discount anyway.
Okay.
You know, it's a hospitality business. So you were saying that you have clients that are like, oh, I don't want to have to do all of this work.
Hmm.
All of the work is kind of upfront.
Right.
setting all those things up. But after that, like I manage 15 other units,
You're right.
myself, so all the software and our team really manages it for me.
Well, those two P's are probably the key to it. Having
Process
the
and
right
people.
process and the right people in place
Yeah.
and knowing those numbers too, knowing what the expense ratio is for,
Yeah.
cleaning. And
Even with long-term rentals, right? If you have a 25 unit
yeah,
apartment, you're not going to be the person over there collecting rent and, looking at applications and things like that. You're going to have VAs doing that. All of your rent collection is going to be automated. It's all going to be online, right? You're going to have the right processes, the right people in place. So then you
right.
can scale. And that's how we scaled it, our property management business.
So let's talk about calculating in that and predicting, how much money we're going to put in our pocket. So typically based on like let's say just on any given 12-month period, how much based on, if on what's coming in, what's going out, what are typical profit margins in the space, and what are some ways we can increase those profit margins?
So let me compare two things. I'll compare the two strategies: long-term rentals and short-term rentals.
Hmm.
Because your debt service is going to be different for everyone, interest rates, insurance,
Sure.
things like that, right? Your cleaning fees might be different, your utilities, all those things are variable. So what I like to look at is I like to look at the two strategies: a long-term rental and a short-term rental.
Hmm.
So you're familiar, right? Long-term rentals, a good long-term rental you could make per door anywhere from 150 to maybe $300-400 a door,
Sure.
depending on how much of a discount you got into
Hmm.
that, right? With short-term rentals, you're probably 10, 15, 20 times more. So it's like more like $1,000 to $1,500 a
Hmm.
door, or maybe even $800 on the low end
Yeah.
per door. So let's say you have a triplex and you're making $200 per month, like that's after all expenses per door. That's $600.
Right.
Now you got that same triplex as an STR, and you're making $1,000 a door.
So what I hear you saying is that the SCR still have more potential for
Even
higher.
after expenses, yes.
Okay.
Because yes, with long-term rentals, your expenses are a lot lower, right? I'm
Hmm.
not paying a cleaner. I'm not paying a handyman. I'm not paying utilities.
Right.
Okay. With the short-term rental, just because of the nightly rate and the additional income you're getting in, you're still covering those utilities. You're still covering the cleaners. You're still covering those things, the additional maintenance you might have, and you're on top of that, you're still walking away net $800,000 per door.
Let's talk about surprises under estimated expenses in your maybe in your experience, either in your with your rentals or properties that you've managed. What are some expenses that get forgotten about or missed or come up? What are some surprises that come up on that P&L statement?
I think honestly, if people don't take the time to replace and repair the things that need to be done up front,
Hmm.
those can be surprises later. I'll give you
Yeah.
an example. So we bought a property that was built in 1925. It had a slate roof on it, but
Hmm.
everyone in the area was telling me, hey, if it doesn't leak, leave that slate roof alone. You probably still have another 20 years left.
Sure.
And I took that advice. And well, what happened? Beryl rolled through a couple
Yeah.
years ago and ripped off a few of those shingles. And now the repairs that I thought I could get, no one in town repaired this type of roof. So
Mm-hmm.
what did I have to do? I had to get the roof replaced.
Yeah.
So that was a really big expense that I wasn't counting on. So lesson learned, take care of these things up front and you have fewer opportunities to run into these large expenses that come up. You know, One thing though that seems to happen too sometimes is guests will flush anything and everything down the toilet. You know, like wipes, those things that you're just not supposed to. Kids
Yeah.
will send toys down there. So there have been some higher expenses. And when I mean that, it's like maybe $300 or $400 to have a plumber come out to scope my sewer line and clear a clog, here and there. That's happened once or twice on our properties. So those are things too that you can communicate with your guests, right? We put signs up then at our point, like, hey, please don't flush these things. Although they say flushable, they are not flushable.
Yeah.
Please put them in the trash. And guests are still going to do it anyway, but it probably happens less often now.
So when a guest does something like that that costs you money, that's taking money out of your pocket, whether it be damage or
Mhm.
flushing toys down the toilet, like how do you how do you recoup that loss? Like what do you do?
So the hard part about that particular scenario, Austin, is proving it. Is proving that that particular guest caused that particular problem. A lot of
Proving
times,
it to who?
well, to Airbnb and the guest. So we can do something called an air cover
Hmm.
request or claim. Airbnb has this $5 million insurance policy where if the guest breaks something or damages something, they'll reimburse you minus depreciation.
Right, right.
They're not going to give you 100% of it.
Hmm.
But that particular instance where there's a clogged sewer line. Now, if there's a clogged toilet, right, that is something the guest caused right then and there. I can prove that. I've got to get a plumber, then I can do that claim, right? But if there's a clogged sewer line, that could be the result of, a month's worth of issues or several months worth of
Sure.
issues, right? I can't pinpoint that. The easier things though is when a guest breaks furniture, or breaks a lamp or just intentionally damages things like that, or if they're bringing unallowed pets or they're smoking in our units as well because we don't allow that. We set forth those things in our rules and we also give them like, hey, if you do this, this is what's going to cost for us to bring in an ozone machine, or this is
Okay.
what's going to cost to bring in additional cleaning to get the pet hair out. We don't allow pets that aren't, service animals because a lot of our guests might be allergic to pet dander and things
Yeah.
like that, right? So we communicate with the guests up front. This is what it's going to cost if you do these things. So there's no surprises, and then that's easier for us to show Airbnb. Hey, we let the guests know they knew what our house rules were. They still chose to break them. This is what we need in compensation.
There you go. Got it.
Yeah.
Okay. So last thing I want to hit before we end is the transition from a short-term rental to a long-term rental and potentially back from long-term to short-term.
Mhm.
So, we know that the short terms they potentially have more room for profit.
Right.
Um, but at the same time, there's volatility in that equation as
Mhm.
well, which
Mhm.
has led a lot of people to switch their strategy to a more long-term approach.
Right.
When did you know, and for what property? And you don't have to
Yeah.
be specific on a property, but when did you know, like, hey, it's time to convert this, and what has to happen before you go back to the short-term
Yeah.
route?
So we try to have a certain amount, we try to allocate a certain level of reserves per property. If something goes crazy, and sometimes it doesn't always work out where it's just even across the board. Sometimes we have more reserves for one than the other. But when we start to fall below our reserves start to get below a certain point because we're having to now cover more of the mortgage,
Hmm.
out of our reserves, that's when we're making that decision, hey, we need to pivot.
Okay.
Selling, in my opinion, is the only time that you really lose money in real estate is when you're forced to sell.
Yeah.
If you can hold on long enough, you can recoup a lot of the sales. And we talked about it before. You're making money in other ways as
Yeah.
well, right? But that's when we're making that decision. Okay, we need to pivot, and also we're underwriting it too ahead of time. Are we going to pivot and be steady and cash flow even, or make a little bit of cash flow, or just lose a little bit of less money? So I'm doing that underwriting. If that makes sense, that's when we flip the switch,
Right.
right? We're listing the property. We'd like to rent it furnished,
Hmm.
at a premium because that saves us from having to empty out the property or put things in storage and pay extra fees and things like that. So we were able to do that on our three rentals that we converted to
Nice.
long-term rentals. We rented them furnished. They just wanted us to remove a few things,
They were
right?
all three of them you converted to 12-month leases.
Yes, all three of them converted to 12-month leases. Now, if we have to convert back to short-term rentals, really the only things that we have to do is just kind of resupply the houses with the consumable stuff like
Hmm.
coffee, creamer, things like that, and maybe replace some linens,
Right.
and really just replace one set because we took all the linens out and the people that moved in brought their own linens, you know. So all the furniture is there, right? So converting it back, again, it's going to be a little bit of capital up front, but we're not talking tens of thousands of dollars like it is when you're just getting started. We're talking maybe a couple $1,000s just to resupply the house.
Very
You know,
awesome. Well,
yeah,
man, I appreciate that. That's very enlightening. So my key takeaways pretty much the three principles of real estate that apply to, different strategies is number one, you got to know the numbers. You got to dig into the data. You got to let the data do the story and try not to bring your bias into that to that
Mhm.
underwriting. Second, people, get the right people involved, from contractors to property managers to, to handymen,
Mhm.
and then have a process, have a documented process. And that's a huge advice for any business owner. Like, your process, you should be able to hand it off like a handbook, like if you're buying a franchise.
Yeah, I think eventually though, you want your business to be able to run without you to a certain,
Exactly.
you know. I think all of us as entrepreneurs, when we're first getting started, like we're wearing all the hats,
Hmm.
like we are the business at that point. But I think eventually the goal is to have this business be able to run without you. So you're putting the right people and teams in place, And
Yeah.
then that what that also creates, Austin, and you know this, is now that is a marketable company
Yeah.
at that point,
Yep.
right? If you're running it all and you need to step away and you want to try to sell that business, it's going
Yeah.
to be very difficult to do that.
Yeah. And sometimes just having a consistent process goes way further than having bells and whistles. If you can be
It does.
consistent with it, that's going to take you. It's like,
And good books. Keep good books
keep good books in the
in
like
accounting.
on the table and get some board games and
Your accounting book, your CPA. Have a
oh,
good
okay.
CPA. Yeah,
I
track
was
all that
like,
stuff.
if I'm at an Airbnb sitting near the beach, I want to read a nice book, man.
We have books
No,
too.
keep your profit and loss statement. Know your expenses month to month. Don't skip a month. Know your numbers. Know your
Yeah.
numbers. That's how you make a lot of money. So,
Awesome,
all
man.
right, brother. Appreciate your time. Thank you, everybody, for joining us. We had a really good group. As always, anytime you have questions or need anything, shoot a chat in the chat bot. Don't forget to go to YouTube. We have all of our videos, past videos on there. Comment, like, subscribe, hit the notification bell. Also, we're on Spotify now. We're on Apple Podcasts. So go get caught up. This is episode 28. 28 that we've
Yeah.
done. So,
Go.
all right, everybody. Have a good one. Thank you.
All right, man. Bye.